Greetings, greetings, greetings. You are now tuned into the vault. Trust Christian own, nothing control everything. Just want to thank you for tuning in live, listening to replay. Always appreciate everybody that tunes in live, listens in on the replay. This is the vault, episode 638, Private Wealth Conference Review, December 2024. So, really excited for this particular episode. We were in a environment that we traditionally have gone to, and just going to give our review, give our do our best to give as much value in this episode that we took away from the conference. It was multiple days. The conference cost $2,000 minimum. It could vary depending on what level of membership you had. They were it was a sponsored event, so there were sponsors at the event. Various different companies, from art collection companies to private trading company platforms for high net worth investors. Uh, jet things, memberships. There actually was someone at the conference that you can actually they have a business built around burying people in trees, so maybe that's a tax benefit or something of that nature. But what's so funny is when we were able to even talk to that individual, we were very specific. If you all would have been standing there, the questions that we were able to ask that individual, most people wouldn't. Asking them was to set up as a B corporation, and for them to actually be very aware of what we were talking about, but say, hey, we're not B, but we are aware and we know how to do B, a B corporation. That was one. Another thing with that particular individual, they knew what a conservation easement is, because that's what the whole daggone burying people as a tree type mentality was. So it was very interesting. That was a sponsor. It wasn't necessarily like, but these are things that we wouldn't necessarily say wealthy people are doing, but clearly they can afford it to bury themselves and have a tree be planted because of that. So interesting business model. So once again, we're here. 3 day event. Some of y'all say, okay, Trust Christian, give us the rundown. Uh, it's about from 10 till 4. On average, you get an hour lunch break. They provide lunch usually. Uh, you know, you're in an environment now where heavy education is going on. We have a ton of notes, so just be patient with us. It's pretty thorough debrief for our trustees that weren't able to make it, and then we also make it a point to do the research for our families. So families that understand that we're a research and development firm, we make it a point to do that. That's why we go to the conferences for on behalf of families as well, businesses as well. So just really good overall thing. So just gonna hop straight into it, and 10 to 4, or pretty much networking for at any time after that. They provided drinks. It's pretty much business dress. People ask what type of dress it is. It is business. It's business. As far as they're not wearing ties, not formal, but it is business dress. You know, but sport coats. So we hop into it immediately. Business people are going on stage. High net worth investors are talking. Accountability by compliance. Somebody said, "Sure, we working for the family wealth development." Okay, so we're gonna hop straight into it. Uh, so immediately you start hearing statements like, "We want you." It's like when trustees come to the trustee training program and say, "How do we select a good trustee? How do we know if someone's gonna be a good trustee? What do we put in place as a system?" You put accountability by compliance. These are some of the thought processes that you get inside of high net worth investor mentality, not just employee mentality. So when we talk about vision, one of the things that came up was being institutional versus non-institutional money. Definitely encourage a lot of people that it doesn't matter what level you're at. A lot of people think, well, I'm just starting out or I'm at a lower level, so should I have institutional quality programming? That's just something that we're going to implement more going into 2025 is institutional quality. Everything that you touch as a business person being institutional quality, not just being non-institutional, and it's a big difference in presentation, big difference in receptivity versus investors. So definitely want to talk about that and just think about that going into 2025. Uh, One of the things that came up immediately was the team is more important than the strategy, and a lot of people they don't even know that they need a team or a strategy. So, but it's interesting because if you don't have a good team, they're not going to execute a great strategy. And if you have a great strategy, but you don't have a good team, it goes both ways. So you have to have a good team and you want to have a great strategy. And, we were talking to investors and they're telling us, hey, look, if it's not a 20% return, don't talk to us about it. Like, don't even, it's not gonna give us the sizzle that we want. And that's fair. They said as well with your team, you want to have depth on your team. When we talk about having multiple lawyers in your stable, multiple accountants in your stable, people that you can connect with, and depth is something that this is a wealth thought process. Um, Interesting, we sit in a room and you hear investors say like, especially when for all you all to have businesses and you're looking for money, when you're looking for money from private investors, you have to have a good story. And this is something that, it doesn't get emphasized enough because most people think they don't have to be a good salesman, but a good salesman can tell a good story. And it's just interesting to see that, the marketplace, people they don't have good stories. You all have to judge yourselves based off of how good your story is. When you hear investors saying, we want to hear what's the story behind the project, what inspired you to do this. They want to hear the story. It's like when you walk in Shark Tank and the first thing they ask them is like, what brings you in today? And they say, okay, well, I'm here to raise money for this, that, and the third, and they tell their story. The story is something that really captures investors, and you hear that theme even in the private sector still right now. So, very important thing. Um, One of the things that we took notes on immediately was the revolution of you versus the machines. This is something that, we interviewed Sophia Stewart on this podcast before. We're not saying that the Terminator is real. We know that that's a movie. That's a soliloquy to life. But at the end of the day, ladies and gentlemen, we are in an era officially now where because the phone is on your hip all the time, it is you versus the machine. And how much are you going to integrate that into your life? Or how much are you going to either provide services for the machines, but the machines is something robots with interestingly enough, we were talking about robotics right away. We talked about that as heavy investment environment. Of course it's going to be heavy investment environment. It's this is what we just said is robotics. It's going to be something that it's what they say is actually the fourth industrial revolution or third industrial revolution, whatever one you want to say. But we're in that. It's not going to be crypto. It's going to be robots. So we know robots are something that, this is unfortunate. You see so many communities that are going to miss out on the wealth transfer. It's not about the money that's already created. There's new money that's going to be created. Nvidia alone has to make chips for these robots. They're already $1 trillion company. That already lets you know whoever can get in and dominate actual robot making or parts for robots or repairs for robots. That market it's not that it's just completely uh, that it's not tapped into. It's the fact that it's going to grow over a significant period of time, and it has a lot of practical application immediately, which it does right now. So this is going to be interesting to see the robotics play. It's disappointing to see Americans not take advantage of this wealth transfer. You guys, people say, oh, people ask all the time, ladies and gentlemen, what are you going to benefit from this? You, from robots. How are you going to benefit from it? Is it going to be small scale or is it going to be billions of dollars? We're in the era of trillions of dollars. That's the era we're in. Robotics is that. Uh, they talked about mindset. We're in this era of, and we can say it, we can say it proudly because it's disappointing to see when you walk in a wealth room, private wealth room, and we're talking about health, and they're talking about physical health, but they're not talking about mental health. But if you understand the way that they're saying it, they don't call it mental health, they just call it mindset. So there was a pervading theme of developing your mindset, because that is a part of mental health. But because people don't want to say that it is, and it is, that's what mental health is, your mindset. Do you get up with an attitude of gratitude? Do you get up with an attitude of, okay, I got to figure out how to make some money in America where robots are being built, or I got to figure out how to create a robot company right now, pre 20 years from now? We always we had a theme in here that one of the mentors trained us on is investigate before you invest, and that's a big deal. You're seeing a lot of buy and replace models go up. A lot of people call it value add. So we're just gonna give some notes here. Um, we were sitting in a room with investors. They're looking for 15 to 20% annual percentage return, and they want tax efficient systems as well. So please don't approach them with just a business. They would like to know if you care about their tax liability, even though they're wealthy and rich. They still would like to know that that you actually that you they want to know that, ladies and gentlemen. They want to know that you can give them those type of returns, 15 or 20 or double digit, high double digit returns. Of course, now you think about this. How is it that poorer people, middle class people, they go into the bank, they get a 4% investment, then you go over to the private sector, you come into the private sector with private families, high net worth investors, and they're over here getting high double digit returns, and people are okay with that. Why are you okay with that? People are okay with that because they're not going to step up to the plate and get the money that's necessary in order to qualify for the high double digit return investments. That's it. And so we we talked about some of the investors sat in the room and said, look, we understand that everybody doesn't have money, but they said they wanted, one of the investors, he said he wanted to see the three T's: time, talent, and treasure when he's looking at a business. Are you putting in the time? That's a big deal. Are you putting in the time? He said, and then the talent. Of course, the talent, you have to have some level of talent. Or how are you surrounding yourself with talent? How good is your talent? You're only as good as your team. That's to be honest with you. You're only as good as your top starting five lineup. And this can be frustrating for people because they know that they're carrying dead weight. That can be challenging but think about this, ladies and gentlemen. We're sitting in a room and you hear investors say, hey, look, we actually needed, this is second or third gen. So second and third gen finally stepped up, went into the family estate and said, hey, we need to do an audit of the family estate. Went in, did an audit of the family estate. This is a family that is a centimillionaire plus. That means they have over $100 million. And they're saying, hey, look, we were paying, they said they were paying at least 1.3 to 3 points, which is 300 basis points on fees, to just because it was an older estate. They were on a second and third gen actually. So it just shows you that they were getting hit with fees from various organizations, and you can minimize those fees. You can minimize those fees. You have to be on top of your game. You have to make sure that you're in, not necessarily compliance, but make sure that you have good depth on your team to make sure that you can stay not necessarily compliant once again, but be able to have good governance. A lot of people don't want to say that, but that was a topic that always comes up. But even hearing somebody that deals with, that's a centimillionaire, and tells you, hey, look, we're not too concerned always about the returns. We need to cut down our expenses and fees that we're getting charged. Why? Because at the private wealth level, obviously they have enough money, so it's not about just getting more money, but it is about minimizing the fees that we have to deal with when we're managing our money. And so, interestingly enough, uh, here we go. Mindset. Once again, we talk about the mindset. What do we say? SODEOD. Start of the day, end of the day. What's your daily? What are the top 4 to 6 tasks that you're supposed to do? And you're actually not supposed to do the next one until you did the first one. And it's keeping high levels of tracking of habits. We talk about this on the podcast here, but somehow, we laugh. Why? Because we sat in a room with people that are 70 years old and are richer than the average individual and still get up at 5:30 in the morning to actually do something productive with their life. So when people think they're gonna make all this money and they're not gonna do anything, hey, that's your vision. But from what we've seen consistently, the ones that we literally, and we have no problem. We be Trust Christian. He don't have a problem being transparent because people don't have a pair of they don't have gravitas. You have to walk up to people and be confident. And so yes, we have no problem with approaching these 70-year-old multi-billionaires. They definitely multi-billionaires. People got more than $40 billion assets under management, and you're standing there talking to them, and you're just wondering like, dang, how is this person 60 plus years old and they're still waking up at 5:30 in the morning and they're working out and they're still hitting the office because they're serving families at this point in their life. It's not just like they're focused on making money for their family. They're managing other people's wealth and family. And how do they get up so early to do that? And then you got broke people talking about, oh yeah, I can't get up early. I'm not a morning person. That's what broke people say. I'm not a morning person. Rich people and wealthy people don't talk like that. We're just gonna go ahead and give y'all the heads up. The ones that's gonna live beyond the fact that they have money and don't have to work, most of the time they're doing something, whether it's charity or not. So we do want to share. There were quite a bit of charities in the room. Once again, a lot of feel good stories. You're always gonna hear feel good stories from billionaires talking about feel good story stuff, ladies and gentlemen. Uh, Even one of the wealthy families talked about holding 5% in gold right now. People come to the vote all the time, say, "Oh, what should our holdings be? What should our holdings be?" We got people that don't even have proper accounting for their family holdings. Do you have proper accounting for your family holdings? If you don't have proper accounting for your family holdings, you can take the next 15 days of 2024 and just say, we're going to do a financial needs assessment. If you all want to reach out to the vault and do a financial needs assessment, that's free. That don't cost the vault. It don't cost you nothing. You can reach out to the vault. We have team members that, once again, they're in the what people call the insurance, but you still got to do a financial needs assessment. Then you got people reaching out to the vault. Yeah, we're not gonna go there because we could go there. Once again, if you reach out to the vault, people reach out to the vault all the time. They say, what should our portfolio look like? Once again, we're sitting in a room with high net worth investors. If they're allocating 5%, 5% is 5%. If you want to do more, great. But 5% is what a high net worth investor is willing to allocate. Obviously, that's going to be a substantial amount when you're a billionaire or you're a multimillionaire. And so we talk about, we get into this whole theme now. What's the investments they're making? Trust Christian Vault, what they making? What's the investments? Here we go with this whole affordable housing stuff. Everybody talks about the housing situation. Ladies and gentlemen, if you want to be wealthy, supposedly, if you want to make some, what we call chump change, if you want to make some decent change, half a million, $1 million a year, few $1 million a year, literally, affordable housing. It's annoying. Why? Because we think it's annoying. It's obviously a popular investment right now. Why? Because it's got a great price point, but the construction takes too long. And if you guys are comfortable building cheap houses and cheap properties, and people aren't trying to say that they are, you can't build fast without building cheap. That's the problem. What we think with the market, we're not condemning it, we're not for it, we're not against it. So at the vault, we may talk about it and sound biased, but we're not. Affordable housing, obviously, we hear it across the board. It doesn't matter if you're a high net worth investor or just starting out. It's just a theme right now. We don't know how long the thing's gonna go on. It sounds like it's popular. Oh, go get into affordable housing. Yeah, okay. Ladies and gentlemen, affordable housing, or you just go get into senior living. That's not affordable housing. Senior living, you're going to be in business. Senior living is a good business. But we don't want to deal with dead people over here at the vault. But yes, that is a great business. So why would we do affordable housing when senior living is the same thing as affordable housing? You got a bunch of people, multifamily at that. That was another thing. Multifamily affordable housing. We're not just saying affordable housing without it being multifamily, affordable housing. And it's just, once again, we're not talking about it biasedly or unbiasedly, but it's just one of those things. Why not just go get older people that they're going to deal with these medical programs from the government? They're going to end up getting subsidized. You're going to have a facility, and that's that. They call it skilled nursing facilities. Those are investments heavily we hear. Then you hear, multifamily, senior. They say, oh, Trust Christian, how do you deal with this stuff? How do you deal with it? Meaning, well, the path is the math. We're gonna go ahead and say it. This is from a billionaire. The path is the map. See, everybody want to fall in love with the business. Trust Christian in the vault. We know that. Most of y'all fell in love with what you're doing, and that's the problem. It ain't paying. You don't need to fall in love with the business. Why? Because we said on the line today, even in the real estate sector, they're not investing in people that don't know and aren't going to give them an exit for when they're going to get their money back. Whether it's a return on capital or a return on equity, they want their money back. When are they going to be able to exit the deal? Some investors want to get out in 12 months. Some investors want to get out in 6 months. Not everybody wants to be married to your business. Not every business, not every private investor wants to be married to your business and giving you money forever. So that's the advantage of going into the private wealth investment structures, is because they're a little bit more flexible, but at the same time, yes, sure, their rates are a little different. They're not all hard money. So don't get the terms twisted. So that's another thing. We sat in the room. People get it twisted. Oh, I got VCs, I got angels, I got private equity. And people have to do their homework because you got to go to the right investor. There are thousands of those specific investors. But people are just, oh, I heard I should go private equity. But you're not trying to give up equity in your company. You don't know if you should go angel or VC. Very important. The path is the math. That means when you're looking at a business, do you have it penciled out? They ask, do the deals pencil out? Why is the business market so bad? Because it's sophisticated and unsophisticated people. That's all. Are you aware of what the math is supposed to be for your business to be profitable and live the lifestyle you want? Okay, great. Always trust the fundamentals. That was interesting because when we heard investors sitting investing, oh yeah, you gotta, this all about the story, or they said the story was important. We think the story is important too at the vote, but it's interesting because that's not the main thing. You can't just go off a story. You can lose your money off stories. That's the news is the story. So the path is the math. You gotta trust the fundamentals. The fundamentals is the story and the numbers. It's not one or the other. You can't just go off the numbers because some stocks and pump and dumps. Pump and dumps happen off of the numbers. So you have to take a fundamental approach. This is, we sit in a room with guys. It was funny. We sat, this guy, he said he spent, it was either $200 million or $25 million, but we think it's the bigger number because it sounded really big. And he said he followed the Warren Buffett approach and he bought an insurance company. So individual was obviously well off, but they took the Warren Buffett approach and bought insurance. They bought an insurance company. And the individual said it took him. He said that the individual that told him about buying the insurance company said, "Is this how this gonna work?" He said, "You're gonna run into where the insurance companies are too big and you're gonna be able to barely buy one, or if anybody could buy one, it's you, because no one's gonna be able to do that." And interesting enough, this individual bought an insurance company, said it was super expensive, but he said that there's super benefits to buying an insurance company. Super benefits for your life, not. And then think about recently where there was a CEO of a company that some negative things happened to that individual. Well, if that's the case, ladies and gentlemen, be very aware. There's going to be a heightened sense of people that own these things now to have them protected. So it's actually a good thing in some respects. Alrighty, the path is the math. Always trust the fundamentals. Surprisingly, we sat in a room and it's just all about due diligence. It's all about making sure you're doing your homework on your business. A lot of people don't do market research. You got to do market research on your business. What's the TAM? What's the total addressable market for your business? What's the SAM? What's the service or the local, basically, addressable market? So we talked about emerging markets. Real estate's hot right now. You hear a lot of real estate conversation. It's obviously a mixed review conversation with real estate, whether rates are going to continue to drop or rates are going to pretty much go stay flat and then you hear at times people trying to be contrarian and say, oh, I think the rates are going to go up. Like, no, they're not. And sorry, the vault will be okay with saying that the rates aren't going to go up for real estate. And if they do, it's just this is a challenging time, especially with the administration that's in. It's not just going to be easy to raise rates on this administration. This administration is looking to actually revive commercial real estate. It's already people are already aware of it. You're seeing industrial real estate have investment capital go into it. You're seeing private capital move for sure. There are a lot of public markets that aren't moving as fast on and investing in industrial real estate. But there are plays right now. You're seeing office buildings that are being converted into condos. You're seeing office buildings be converted into flexible workspace. So once again, office space has some level of investment. It just may not be as popular as it was at one time because people will work. But once again, we had investors sit in the room and have a conversation and say, guess what? Zoom put out a memo as soon as the pandemic almost ended and said we want everybody back in the office. So how apropos is that the one company that is supposed to be aiding people from working from a conference perspective, a video conference perspective, literally wants their employees to be in the office. And so once again, we see this type of mentality, ladies and gentlemen, that, it's a cynical mentality. And that's something we can go ahead and bust down right now and talk about it. Ladies and gentlemen, if you have fear or if you have a scarcity or limited mentality, you're not going to be generational wealth. That's not trust Christian. That's the law of physics. You got to get rid of fear because that doesn't allow people to see opportunities. And one thing that we can see, whether that's in the public marketplace or in the private marketplace, which conversations come up. Remember, people have economics degrees, so they believe in supply and demand, which led to the next theory of what is that? Scarcity. There's a limited supply. It's not a limited supply, ladies and gentlemen. That's the challenging part. If people say that, and that's why there's not more people that are wealthy, because people don't understand that. If you understand that wealth is a birthright, then how is there a limited supply? But there's a limited supply because people have been taught economics. Oh, there's a supply and demand. There's a scarcity. It's only a finite amount of this and this and that and this and the. Who said that? Did you create it? Did you discover it? They still discovering oil wells, but people believe in electric cars. They're still discovering oil wells. That's not going anywhere. But people think it is. So scarcity mentality, limited thinking mentality. Once again, these are things that we just want to put out into on the podcast and say, and we're thankful that we brought it up because, ladies and gentlemen, if you have it, it's not going to work. Like, it's just not going to work. We know this for a fact. We sit in a room. It's an abundance mentality. It's a growth mentality. It's a victory mentality. 100%. And that's a training, ladies and gentlemen. That is a training. That if you've been programmed to be negative or cynical, not at all. Not going to work. Not in the wealth environment because the environment is built off of creating an abundance. Because if wealth is your birthright, you can create it. You can exude it. And so those are some of the things that we got from the conference. Wow, let's go there. We sat in a room once again. We asked like just some older people, man. There's a lot of older people, and when we say older, we're talking like over 45, over 50, over 60. And you see a lot of them just still running hard. You're like, man, you start running hard and you want to know, like, is it legit? So we just encourage you to keep working, ladies and gentlemen. Keep focusing on your goals and dreams. Look forward to hearing all of those things and so much more. And so it is. Peace.